Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. Real estate investment trusts, or REITs for short, have been on the back burner of many investors. Why? Rising interest rates make it more expensive to borrow, and REITs generally have aggressive acquisition strategies. Record consumer debt and a long promised recession have spooked investors. But with the Fed pausing its interest rate hikes, hope for a rate cut in mid-2024, and expectation that a recession will be avoided, have put REITs like Getty Realty Corp, traded on New York Stock Exchange under symbol GTY, back into focus. John?
Yeah, thanks, Mo. Yeah, and it's back in focus for good reason. Getty Realty Corp recently reported strong third quarter results, reported record year-to-date investment activity. It raised its quarterly dividend for the 12th straight year, and it actually increased its full year 2023 earnings guidance. The best part is that GTY stock is trading at its lowest level since October 2022, with even conservative Wall Street analysts believing undervalued GTY stock has double-digit potential upside.
Okay, so what's the big deal about Getty Realty Corp?
Getty Realty Corp is the leading publicly traded U.S. REIT that specializes in the ownership, leasing, and financing of convenience stores, gasoline station properties, and other single-tenant retail estate, car wash, auto service, auto parts, etc. The company's $2.3 billion portfolio includes 1,080 properties located in 40 states and Washington, D.C. Now, the majority of those properties, I think it's slightly over 68%, is made up of convenience and gas stations, and that's followed by car washes, auto service, drive-through retail, and auto parts. And with the 99.7% occupancy rate, the company's essential e-commerce and recession-resistant business model comes with 1.7% annual rent escalation. And I think most people will be familiar with their biggest tenants, include 7-Eleven, BP, Cross America Partners, Global Partners, and Valvoline.
And the company's active acquisition strategy helps it diversify its tenants, property type, and geographic reach.
Yeah, in 2022, Getty Realty invested $157.5 million across 52 properties. And over the first 3 quarters of 2023, Getty invested approximately $266 million across 102 properties.
And talking numbers, in addition to reporting strong third quarter results, Getty reported record year-to-date investment activity.
Yeah, for the third quarter, ended September 30th, Getty Realty announced that net earnings increased 20.5% year over year to $16.03 million, or 31 cents per share. Funds from operations were up approximately 17% at 53 cents per share, and adjusted funds from operation advanced to 57 cents per share. Now, during the quarter, rental income grew 12% to $41.3 million, while revenue from rental properties climbed 17.5% to $48.8 million. And thanks to strong year-to-date results, Getty management was forced to actually increase its adjusted funds from operation guidance to a range of $2.24 per share to $2.25 per share. And that's up from a prior range of $2.23 to $2.24 per diluted share.
Something that income hogs will love. This company has raised its dividend for 12 straight years.
Getty Realty's convenience and automotive retail properties provide essential goods and services to the mobile consumer, leading to durable, as you're saying, rental income, strong rent coverage ratios, and stable tenant credit profiles. Yeah, this helps provide investors with reliable, growing, ultra-high yield dividend. Most recently, the company's board declared a cash dividend of 45 cents per share. That's a 4.7% increase over the 43 cents per share paid out the previous quarter. This works out to an annual distribution of $1.80 per share for a current yield of 6.26%. That's almost twice the current inflation rate. The dividend is actually payable on January 11th, 2024, to holders of record on December 28th. 2023.
GTY share price is on the rebound.
Yeah, investors obviously liked what they saw in Getty's third quarter results. They also are pleased to hear that the Federal Reserve said on November 1st that it would keep its interest rate between 5.25% and 5.5%. And now the Fed did not rule out another rate hike when it meets next in December. But Wall Street seems pretty confident that the Fed is done raising its rates for this cycle. This has helped boost Getty Realty stock higher over the near term, up roughly 9% over the last month. Now, that's the good news. Since the start of the year, GTY stock is actually down more than 11% at around $29 per share. Now, the outlook for beating down Getty Realty stock is pretty bullish, with Wall Street analysts calling for Getty Realty stock to rally over the coming quarters to a high of $33 per share.
John, thank you so much for your insight. There are a lot of great things going on with Getty Realty Corp. First, it operates in an industry that has proven to be recession and pandemic resistant. From 2015 to 2022, AFFO margins has increased by 16.1%. AFFO per share has expanded to a compounded annual growth rate of 5.2%, while dividends per share have rallied at a compounded annual growth rate of 5.4%. In the third quarter of 2023, it reported earnings, FFO, and AFFO growth. It also reported record year-to-date investment activity and raised its full-year earnings guidance. For yield hogs, Getty Realty also increased its high-yield dividend for the 12th straight year. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.